You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that funky tune means it's time to bring to a close our recording week here on the old Options Insider Radio Network with the funkiest program on the old network. Of course, I'm talking about TWIFO, This Week in Futures Options, a program where we break down all of the fascinating activity that's going on the other side of the fence. So the futures option side of the fence, the corn, the crude oil, the gold, the beans, maybe some surprise products thrown in there, something you don't expect, as well as, of course, some crazy trades. Mix it all together with your questions, your feedback, and you got the heady brew that is TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, as well as many fine archive episodes of TWIFO. You got a bunch of other great episodes and archives for you guys to peruse at your leisure. The easiest place to do all of that, theoptionsinsider.com. While you're there, feel free to surf around, click on some breaking news from the options market, some unusual activity, some education, some analysis, some futures-oriented analysis as well. And, of course, when you're ready to dive into the radio, we got you covered. Click on the Insider Radio Network tab on the program of your choice, and your audio journey has begun. You can always find us, of course, iTunes, TuneIn, Stitcher, Google Play, iHeartRadio, etc., and so on and so forth, even via our mobile app available for all the major platforms, including everyone's favorite, the Fire OS. No Windows version, no Windows mobile version yet. Mr. Nick, maybe we'll get to that. And of course, however you listen to us, unfortunately no live stream today. Bit of a software snafu hitting the studios today, so if you're looking forward to joining us live, we apologize, but you will get this on demand at the usual time on all the usual outlets. And of course, however you listen to us, keep those questions, those comments, those insights coming. We love to hear from you guys. All right, and joining me on the old program today, my usual compatriot, the yin to my yang, the dark side to my light side. He is none other than Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use once or twice a week called QuickStrike. Mr. Nick, welcome back to the TWIFO program.
Hey, here we are. I'm remote again, but at the office, and worked out that I'm not at your office today, given you have your problems. So hopefully you get those straightened out, and we're live again next week. Hopefully, God help us if we're not.
God help us indeed. All the first world problems that we have here, sir. But for you guys listening on demand after the fact, which is all of you this time, the show won't sound any different, except maybe I sound a little bit different because we're recording via our backup systems today. But other than that, everything should sound the same. So, Mr. Nick, we were going back and forth. We have a lot of different products to discuss today. Some actually submitted by our listeners, which we love to see. I'm going to let you pick our poison on where you want to start. Where are you feeling it in your bones this week? Do you want to go dark side, literally, with some Texas tea? You want to go into the magical, mystical, kind of somewhat weird world of beans, or you want to go maybe surprise? You want to kick things off with a surprise, or is that too much heat to bring to the show too soon? Should we save the surprise for later?
Yeah, what do you, at first I think I said, should we follow the dock order? But then maybe we should make people hang on to their seats a little bit.
They got to wait for the surprise, baby.
Yeah, wait a little bit, right? Since I'm overdoing the superlatives of God help us, since it's clearly not that earth-shattering what's going on. But maybe at least we can step the surprise to the second product and talk about one of our favorite products, the Texas tea, huh? What do you think? And then we'll jump into the next.
I think that makes a lot of sense there. And Texas tea was stirring a little bit again this week. Net on the week, the future is up about a handle, pretty much depending on where you're looking across the term structure. Of course, you guys at home playing along can play along with the report as well. Head on over to cmegroup.com/TWIO. This week in options, leave off the F for fun. Just go for TWIO, and you can check it out for yourself. Get all these reports we're talking about right now, the market dashboard, the update for crude, and all these other products completely for free. It's kind of a ridiculous deal, if you ask me. They don't even really make you log in or do anything. You just go there, and it's all available for you. So you're foolish if you don't take advantage of it. cmegroup.com/TWIO. You can do what we're doing right now. Just pull up the tab for crude oil. Click on WTI American. And your journey has begun. And if you do just that, you will see what's been lighting it up this week. Again, as is pretty much the case, I think since we've been doing this show, Nick, I'm hard-pressed to think of another time when it's fallen outside this paradigm. But a little over half of the volume, again, in the front month in the Nov contract. This product just seems to lean front month heavy. Not weekly, which we've discussed before. The weekly's not getting any love. But the front month getting the lion's share of the love, about 52% of the volume this week coming in that front month expiration calendar there. About a little over 5.5% increase in open interest, which is saying a lot. So that's substantial given the fact that WTI, a pretty volume-heavy product. And if you're looking to see, hey, what was really lighting it up this week, what was the product du jour? We've been talking in the past about how the puts have been leading the charge from an overall volatility skew perspective, and that still may be the case, but the calls getting a little bit of love this week. In fact, if you pull up some skew, you'll see the near-term calls a little bit juicier than they have been in weeks past. A lot of that probably due to the fact that the Nov 50s were lighting it up this week to the tune of quite a few. Actually, let's see the exact number here. It was about 28, nearly 29,000 contracts total on the day, including about a little over 11,000 today. So pretty heavy on the Nov 50s today. Also, the Dec 50s lighting it up as well. So near-term 50-strike calls. We've kind of been talking a lot about how crude, when it's been stuck in this right around the mid-40 handle, we've seen this intense push and pull between the 40 puts and the 50 calls, and that continued this week with apparently the calls winning out this week. The Dec 50s also doing about 22,000 contracts coming in for the number 2 spot. Fairly even throughout the week. There was no big chunk like there was on the Nov 50s, with nearly half the volume coming in today's activity. And following on the heels there with about 20,000, nearly 21,000 themselves, so also fairly substantial, are the Nov 47 calls and the Nov 40 puts, pretty much exactly tied with 20,600 contracts apiece. So a little bit of a type risk reversal there, the Nov 4740 risk reversal or strangle, call it how you will, lighting it up today. Also, the volume on those strikes pretty even throughout the week out here in WTI land. It's also been worth noting the skew moving around a little bit. I think particularly in the front month, a lot of that, of course, front month skew is a bit of a misnomer sometimes. It moves a little bit more wildly. I think a lot of that front month action having to do with the action we're obviously seeing on that 50 call strike in Nov and D. So that's obviously driving a lot of things out there. But aside from that, Mr. Nick, obviously implied vol also creeping up a little bit out there in WTI. So we're seeing a little bit of interest out there. What's been catching your eye out there from a quick skew and anything else Texas T this week?
Yeah, I gotta take a look at the vol here. I had some notes for us to talk about the, a lot of that action or a lot of the increase in the vol came today because the futures were up quite a bit. We're off like $1.60 pretty much across the board here. As I fan down the first three contracts in the underlying. So, we retraced quite a bit from a rally that we had. So we could have been, you see a lot of that upside call with that move up in the futures, but the volatility is up quite a bit just based on what traded today. So we had a big move, a big move down. So almost 60% of the rally that we had earlier till the open this morning, we came off today. So you saw some of the people come back in the market and bid things up a little bit. So we're pretty flat from a volatility standpoint prior to that. As far as interesting stuff, it's still, like you said, we see the front month skew went more biased towards the calls. But again, when you start to get inside that 30-day, it's kind of tough to watch that as an indicator. But it is important nonetheless because you are seeing, you'll get a tighter range of strikes that are going to start to accommodate that 25 delta risk reversal, with that you see with the movement in underlying. So still something to watch, but not quite as telling as it might be when you're in the 30 to 60 or 40 to 60-day range. I think from a volume standpoint, the thing outside of just the pure numbers that we were talking about is just the ratios, right? So mostly bias overall in the market. And again, we're showing the first six contracts by default when you go into the report. But if you overall, most of the change in open interest and most of the volume is occurring in these first six contracts. But you see definite bias to the call side. So the put call ratio on the volume overall on the WTI that we're tracking was 0.8. So, you definitely have more calls trading than puts, and same thing for the November and the December and also the Jan contract. You got to go all the way out to March to see more puts trade than calls, but then the volume out there is pretty light. So, as far as the volume, anything interesting out there, you saw your 50 strike that you mentioned was a fairly significant volume number. But what we're looking at was in terms of weird strikes, we had somebody go out there and trade the 69 strike, and that traded today over 6,000 of those. So we'll have to watch and see what happens to the OI with that on Monday to see if those are opens, close, or whatever. Maybe there was a little pop early before the break and somebody got out, or maybe on the little breakdown somebody got in. But again, you got to wonder about where that strike selection comes from. Give me the old 69 strike. Give me 6,000 of those 69 strikes and see what happens. But had to be packaged as part of a spread, more than likely. But put call ratio, that's the big one I think that to notice from the volume side. Like you mentioned, open interest still good increase. Seeing November contract increase quite a bit this week in open interest, which is even though we're moving towards expiration there, it's a pretty big jump. 14% from an open interest standpoint. So good stuff out there, right? We still, I looked at the weeklies here as you were giving the description of what happened. Still not much going on there. Still don't really understand why something like that's not getting, especially in a week like today where we had a really decent range, right? You would think that the weeklies would be something that you could trade like the little short-term future. So again, that's still a mystery. I still haven't gotten a good answer from my friends over at the CME in terms of who I talked to in the energy complex, but maybe it's just a market maker thing. They're just not ready to trade that stuff. But what else here? As far as anything else interesting, it looks like, the break, we got a little pop on the break. So again, I was more curious to see what happened as we continue to rally, right? As we continue to go back up between this 45 and 50 range, one thing I wanted to mention, in the front month, we still have that 40-50 barrier in terms of an open interest max standpoint, right? So the 40 strike has the highest put open interest, and the 50 strike has the highest call open interest. But, the next strike up, which I think is important, right? You can't do absolutes when it comes to this kind of stuff because, you might get something that traded a long time ago, like we talked about last week, that has a real high open interest that's really sort of irrelevant to the trade these days. But the 45 strike in November and the December, that's like the second or third highest open interest. So I still think we're range bound, and it'll be curious to get our special crude oil guest on to ask whether the technicals and the open interest in the options, whether they really do lend itself to the range that the underlying trades, or if it's how much the technical versus the fundamental is in the trade, right? I mean, that's always a curiosity to somebody who's not actually putting markets out there and watching what's going on. But as far as the WTI, that's the stuff I think that's catching my eye today. We'll have to keep an eye on the skew. We are getting some positive increases, but still big biases to the puts. And until we see some change in that, I don't think we're going to see really any change in direction outside of maybe the precursor to this higher call volume as opposed to put volume. Maybe our skew will start to follow suit in the weeks to come.
Yeah, it is that definitely would get my vote for crazy trade of the week. I was just looking into it while you were talking, and 6,200 of the Nov 69 calls going up. That's a fairly aggressive, fairly near term trade going up. So I'll have to keep an eye on that one to see how the OI shapes up. Again, all of that going in today. It wasn't like it was scattered throughout the week. So one big chunk of this afternoon of those Nov 69s. We'll have to dive in a little bit more and see exactly how those went up and what someone was up to. I can't imagine they're out hunting for yield at the 69 handle. It's not exactly a lot of juice to be had up there. But that said, I've seen crazier things. We'll keep an eye on that one, but that is certainly up there in the running for our crazy trade of the week. The other, I think, just a crazy thing that we continue to hit on this show, Nick, and you're right, it is a bit of a mystery why a product like WTI is so front month heavy yet not weekly heavy. I mean, I guess it makes sense in a product like soybeans where so much of the open interest is driven by the crop rotation, the crop cycle. So you see the lion's share of the paper out there in a month like Nov, which is now front month, but hasn't been until now. It makes sense why you probably wouldn't see a weekly lighten it up out there as much. But in a product like WTI, you'd think it would make a lot more sense. And yet, for whatever reason, people want to trade monthlies, but they're not getting any tighter, any closer than that, which is a bit of a head scratcher. Speaking of a head scratcher, what the heck was going on in the aforementioned soybeans this week? The old magical fruit, lighting it up to the downside this week, off about 20 handles net on the week. So we said before, soybean has the potential to rock and roll on occasion, and it was rocking and rolling to the downside again this week. Overall, we saw a lot of activity out there, with surprise, most of the volume yet again out there in the Nov, expiration cycle, about over 3/4, 82% of the volume in the Nov. So that product right now trading all Nov all the time. Of course, it always has. It happens that Nov is the front month now, so that makes it a little easier for people. But that's just the nature of the beast out there in the beans, up nearly 6% overall from an open interest perspective as well. So after a little bit of a quiet period out there, maybe the beans lighten it up again this week. Again, the future's off, depending on where you're looking, about over a full percentage point in a lot of the months out there, which is a pretty substantial move out there in the old beans. And talking about what was lighting it up from a pure beans options perspective, it was indeed the par, the 1,000 calls that were lighting it up to the tune of nearly 20,000 contracts, about 19,500 to be precise. And again, fairly even trading for the most part throughout the week. It wasn't like there was one big chunk. That was followed on the heels by number 2 by the 900 puts. So bit of a risk reversal going up out there too. Not quite as equidistant as we're seeing out there in WTI with the 40 and the 50s kind of playing tug of war all week. The pars are a little bit more relevant than the 900 puts in this scenario, but still a lot of action on the 900s with nearly 18,000 again. The lion's share of those actually coming on Monday, about 7,500. The rest spread out evenly throughout the week, followed by the 940, a little bit more relevant, a little bit more reasonable 940 puts, so just a tick under 17,000 of those, as well as a 910 put. So the rest of the action was all puts all the time. Not surprising given the dramatic downside bias on the underlying this week. Both the 940 and the 910 puts doing about 17, one doing a little over 16,000 coming in, number one. And number two, the 910 puts surprisingly coming in on Wednesday. So you got some weird moves. You got all the 900 puts going up on Monday, Nick. You got all the 910 puts going up on Wednesday, or a good chunk of them anyway, at least. It's kind of weird how the paper kind of breaks out here. And then 950 puts, pretty much all puts all the time, 15,000. We can go down the list. 970 puts, 960 puts, all those strikes from par on down seem to be pretty juicy in terms of put action this week. That aside, Mr. Nick, I know it's the beans have kind of been a popular one for us to check in on every time and now and again when they light it up. We were saying recently how perhaps they weren't lighting it up as much from a collar perspective anymore. That may come as that came as a dismay to some people who maybe would have liked to have a collar on this week. But that said, what are you seeing out there in a vol and from a quick skew perspective this week out there in the beans?
Yeah, it could have been. If you're looking at the report today or this weekend or whenever the show goes out there, you're going to see that the market was down, 12 or 13 as of the close. But prior to that, we were up. All of that change came pretty much today. So we were up 12 or 13 prior to that, or up 10. So we were approaching some of those strikes where you were seeing. A lot of that trade. You were mentioning the 950, the 960s, the 970s. So we were getting near the at the monies there, right? So you're going to see a lot more trade when you're at or around the money in those particular strikes. So, when you're looking at the report, you got to keep in mind where things were throughout the week, not as opposed to just where it ends up, right? So you might get some activity because you happen to be up there. As far as the vol goes, we didn't see much move in terms of the volatility. I mean, as for today, it's down a little bit actually on the move back down in futures. But we've been talking about the rent a little bit in the show, and really the rent is about 12 cents for the November contract. So you really got your money's worth this week, I think, if you owned options. If you're an option owner and you understand that you have deltas associated with your options and that you can scalp your gamma, I mean, there probably was some opportunity there. I'd be curious to talk to some guys that are actually trading it that way to see if they're actually doing anything with their delta coverage, or just trading the move up and down. As far as the skew, you mentioned we're pretty flat, so everything looks pretty much like a pretty even smile. So that means, again, or at least implies from what we've been talking about lately, is just sort of a trade within a range. And if you look at it right now, we're trading within a range. When I look at the futures chart over the last week here, and let me pull this up and see how quickly it's going to come up. If we look at the weekly range, we're going to see that. Come on, chart, where are you? Here we go. I mean, we started out the week around 970. We're back around 953 today. We went up to a 992. So, I mean, we chopped around pretty good. We had, in each day, we had a 10 to 15 cent range. So you own straddles this week, you had a pretty good chance of scalping that gamma if you if that's what you do with your position. But a good range here, but still no real directional bias. I did hear a little tidbit today on one of the farm reports that they thought that the price might reach 11 again. So we might see those highs for this new crop November contract. So it'll be interesting to see if that happens. Again, that's a few people's opinion. It's not necessarily anything that's gospel, but it'll be interesting to see if we do approach those levels. But, vol's pretty steady. Vol's paying for itself, right? And if you look at it from a rent standpoint, how much market needs to move in order to get your money back, the vol's paying for it. Skew's not doing too much in terms of being interesting from a trade standpoint. So if we look at the quick skew, we're going to see that the calls and the puts are both above the at the money. So we have a little bit of a smile, and they're pretty close to each other. So we have pretty much a smile that is fairly evenly distributed around the at the money. So nothing too interesting there at this point. And lots of volume. mostly puts trading in the front contracts. So that's something to keep in mind. So we'll have to see if that put trade translates into some change in skew. Right now, we're not seeing it, though.
I think we're going to cheat a little bit here, Nick, because we're always talking about maybe, especially last week, we were talking about let's add a little bit of let's mix it up a little bit with a surprise product of the week. We asked you guys, what did you want to hear us talk about on the show? And we're going to cheat and pull something from the futures options feedback segment because this week's suggestion came in from Brighton Capital. He said, if the porkers are still active this week, they're at the money. Implied volatility and skew has made big moves. Possible topic for Friday. Also, nat gas is starting to get interesting. Strong seasonal patterns in implied vol there. Well, we're going to take you up, at least on the first part of your suggestion there, Mr. or perhaps Mrs. Brighton Capital, and dive into this week's surprise product of the week. Yep, that's right. It's the Hogs, the lean Hogs. You want to find that over there on the cmegroup.com/TWIO. Click on select products on the drop down. Then it comes down. You got to click on livestock. And then you'll see live cattle, lean hogs, and feeder cattle. I don't know about you, Nick, but this is not an area I typically sink my teeth into, figuratively or literally. So this is kind of interesting for me to kind of see what paper has been lighting it up. And as our friend suggested at Brighton Capital, lean hogs are where the action is this week, with the lion's share of the paper, about 3/4 coming split relatively evenly between Oct and Dec, so about nearly 37% in the Oct and about 38% in the Dec. That's pretty much where all the paper is. And, of course, we're seeing pretty big spikes in implied vol across the board, the biggest out there in Dec with nearly 4 points. That's a big jump no matter how you're looking at it, no matter what product you're looking at from a vol perspective, and a little bit less the farther out you go on the old term structure. The contract that was leading the charge this week was the 54 puts out there in October with about 44, nearly 4,500 contracts total on the day. That was pretty, the lion's share coming that actually on Tuesday, about 1,700 contracts the rest of the week. Kind of paltry, so fairly evenly broken up throughout the rest of the week. So 54 puts where the action was, and then you drop off quite a bit to the Oct 55 and 60 calls, as well as the 52 puts, all doing about between 2,000 and 2,700 contracts apiece. So a lot of activity lighting it up out here in lean hogs. All that translates to an increase in about 7.5% from an open interest perspective. So about 13,000 net contracts being added on this week. That's on a total volume of about a little over 70,000 contracts this week. So a fairly active week from a lean hogs perspective. I don't know about you, Nick, but I don't dive into the lean hogs very often, so it's kind of interesting to see these things. We love the suggestions from our listeners. Keep those coming. Any thoughts you have to share here on the wild week that it was from a lean hogs perspective?
Well, I'm going to do my best because I'm pretty new to this, and it is Mr. Brighton Cap. We'll refrain from his. I actually know him. He's a quick strike. He's a quick strike user, but he's a smart guy, and he always has some great insights, and he's a great contributor to the platform as well, because he's a wonderful user, and he has good feedback in terms of things that he finds interesting or where we can tweak stuff. So we appreciate his input. A little perspective I wanted to throw out there prior to digging into some of the details on the report. You know, the futures and the front month futures have seen, or the futures in general have seen, a pretty steady decline since the middle of August. So, initially, I think when you see that decline, people kind of maybe not write it off, but then what became of that was a kind of a spike in volatility, pushed up pretty hard, and then it has come off quite a bit. And if you're looking at the report, you're going to see that the front month contract, the October contract, is in like 8 volatility points. So that's a significant amount, especially with 3 weeks to go to expiration. So that, even accounting for the theta on an option with a short term like that, that's a pretty big hit in the volatility levels. So and for me anyway, at least in something that's got 3 weeks to expiration, I haven't seen such a disparity in the change in volatility from a front month to a second contract of almost 12 volatility points like that. It's pretty interesting, and especially when you see where the skew itself, the volatility, they don't match up at all across the different across the different expirations. So it's a 21-day versus an 81-day contract, so that may have something to do with it as well. But still, I think that's why the report's kind of neat, because you could see red and green, and you get a pretty good idea of what's happening right away when looking at it. If we look at the interesting part of this is, and this is what Brighton Cap pointed out, October, the quick skew, if we talk about the richness or cheapness of the puts to the at the money, as much as back on September 12th, we saw a almost as wide as it's been in a long time, where the puts were very rich to the at the money and the calls were very cheap. And then in the last week, that is basically gone away completely. So you want to talk about a risk reversal play or a collar play, there was one for you. You got essentially almost, I think I have it in here somewhere, you had where the call vol was 31 and the put vol was 46. So you had basically a 16% cheaper the at the money versus the call, and a 24% more expensive the put versus the call. So that all went away. That all converged back to the at the money. So some real opportunity there from a volatility standpoint. And I guess, and this comes from Brighton Cap as well, the spreads this is a great underlying future spread, because the stuff moves around so much as well. So, you're seeing from a quick skew standpoint, you can't necessarily see it here just in this 1 week look, but if you go back to display settings and you pick report week and you go back in time, you'll be able to see what the skew was in the prior weeks. We added an extra week, so now we can go back 4 total weeks. You can see 4 total weeks in the report. You'll get a pretty good idea of how that change has occurred. So for just that alone, is pretty darn interesting that and that's sort of the whole idea. And those are some of the things that you can find with the quick skew and the reports. You can start to track where these numbers are and maybe look for opportunity from a trade or a positioning standpoint. And then what do we have? So like you mentioned, again, I don't have enough perspective to say like what a big volume number is or what a lot of big open interest change is, but just from a pure price movement standpoint over the course of the week, as well as the price movement over a period of time, whenever you have sort of a downward trend and then a continued harder move downward trend, there's going to be some trade there. So I found that pretty interesting. And Mark, you might see in the show notes there, I got that, not only the quick skew chart, but also that secondary chart. So we can maybe tweet that out at some point or put that in the show notes, where we are showing exactly how much the skew has changed from September 12th to today. So you see that the blue is where we are today, and the purple is, Mark, and obviously our users can't see this, but you can see how big of a difference. So there was basically a complete shift in the way that contract looks. So some interesting stuff there. And again, the whole idea here is to find places to trade, and it certainly looks like this is one to watch. And Brighton Cap is also saying nat gas gets kind of a bad rap because it's so cheap and doesn't seem to move that much, but there's a lot of action out there too. So maybe we can spend some time in the coming weeks looking at that. So we'll at least put lean hogs and nat gas on our TWIFO radar, and see what happens going forward. We'll keep an eye out, and another arrow in our quiver, so to speak, for good topics for the end of the week.
We love those arrows in our quiver. And I'm looking at this chart right now. I was digging into it while you were talking, and you're right, it is quite a substantial flip out here. You guys can see it for yourselves. We'll put it in the show notes here, listeners, as well as that quick skew chart. You can see really kind of things just turning on their head a couple of weeks ago out there in lean hogs. So that's what we're looking for. That's why we do this show, listeners, to try to find these aberrant movements, these interesting developments, maybe in some products that you guys don't tend to watch, which is always kind of fun, something a little bit surprising, hence the surprise product of the week. All right, now we're going to keep on rolling. We already kind of cheated, got some of our feedback earlier. We'll dive into a little more of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. We got one here. It's a comment, I guess the comment/question comes from Ian Felder. He says, I started off in crude futures. Then I moved to VIX futures, and then now VIX options. Well, that's quite a jump there, Ian. He goes on to write, each time I trade a new market, I feel like I see more panoramic moves because I'm less familiar with the underlying in the first few days. It sounds scary, but it's actually kind of refreshing. I guess looking at options has changed the way I look at futures. Has something similar happened to you? Have options changed your outlook on other products? And I was just debating this with one of our other hosts on another program a little while ago, Nick, kind of just the impact of options and coming to options versus other products. You know, I had a little bit of a unique path. I kind of came straight to options right out of school, so I didn't have the benefit, or some may say the drawback, of starting in another product first, like stocks or futures, and then having to learn options. I kind of started off at the kind of the pinnacle, which is kind of helpful, actually, because once I kind of felt, and that's one of the reasons why I did it that way, that once you learn options, it gives you a little bit of a different perspective on the other products. And also, if you can handle all of the myriad nuances and concepts that we're always talking about that relate to options, the Greeks, volatility, skew, time decay, all these things, then you could certainly wrap your head around a quote-unquote Delta One product like a stock or a future. So I find it's far easier sometimes to maybe start at the top and then work your way down just from a product complexity standpoint, rather than sometimes work your way up. Because I find people sometimes when they go the other way, they get a little bit daunted when they come to options because they're not used to these concepts. Futures guys have a leg up in that sense because they're used to concepts like a contract expiring and have an expiration date and all these things and a term structure. They at least understand what that is. You know, stock people, those are all completely nebulous concepts to them. If a stock moves against them, it's just a long-term hold. I'm sure you've heard that before, Nick. So it's a little bit different perspective. But that said, I think they definitely have shaped the way I view other products. I kind of view products through a bit of a unique lens because I started mostly with options, and that's where my viewpoint comes from. But that said, Nick, I know you've traded a variety of different products before diving into the software side. What do you have to say for our friend here, Ian, who wants to know, have they really changed your outlook on other products, or were you always this sour and bitter?
See, I mean, I started more on a personal level when I had my first developer job out of college. I started trading stock, and then once you sort of got familiar with that, you start looking at trading the stock options. So, and then when I thought that was pretty enjoyable and might be an interesting career, that's when I went to the O'Connor Associates and started trading the Eurodollar and the Treasury option stuff. So, my perspective is coming from, the opposite of yours, Mark, because you came from the options and then move your way down. But I do think the options give you a perspective on the underlying that you may not necessarily have when you only start as like a futures trader per se, because the options, depending on the market that you're trading, the options are going to trade, especially back in the when you were in the pit, right? I mean, there were certain strikes came into play based on the news that was going on, right? So you get a perspective of what people are thinking about the underlying by seeing what the option flow is without actually having to even watch what the underlying is. Now, clearly, you got to watch what the underlying is because you got to make your prices and make your markets in the options, and then hedge your options, especially if you're a delta neutral trader like most market makers are in the back in the pits, and at least the people that are trading today as well, probably for the most part. So yeah, I think that they've definitely given me an interesting perspective. I probably think in particular in the crude oil, because as we've developed Quick Strike and we've taken requests from customers, they ask for different things about the open interest in particular. And since obviously the option trade and the open interest are intimately tied together, you start to look at that, those numbers in particular, and you start to see how the underlying tends to move around in those different in between those different strikes or around those different strikes. So I think the options have definitely opened my eyes to a couple of things, paying attention to the actual range of the underlying, because it's all tied together, right? The option volatility is going to tell you what people's expected, what the expected movement of the underlying is, which is going to, then tell you how you might want to trade that underlying. So yeah, it's definitely, especially since the show, even more so, I think it's been, 4 or 5 months now. And when you start to look at the whole thing from the top down, like you said earlier, Mark, you definitely, it opened your eyes to, just the market in general, what's available and how that underlying might move. So yeah, I think that there's definitely some merit there.
All right. Thanks to everybody who sent in your questions and comments and suggestions for what you want us to talk about. That's all the time we have for the futures options feedback for this week. It's also all the time we have for this episode of TWIFO. Nick, we went on an interesting voyage this episode. Started off in crude, got into the beans, and took a nice little interesting side jaunt down a Sunday drive, if you will, through the land of lean hogs. I think if that thing stays as kind of wild and unpredictable as it has been of late, I think we probably will be driving by that way again, at least to glance and see what's cooking over there, as well as perhaps nat gas and a few others on our radar. If you guys have suggestions, again, hit us up. You know where to find us, twitter.com/options or at QuickStrike, QuickStrike1 for your suggestions, or hit us up at the Options Insider or the old-fashioned way, questions at theoptionsinsider.com. And indeed, all of that is baked into the mobile app, so if you're streaming that way, you can hit us up that way as well. And Mr. Nick, before we go, you guys are always cooking up some cool stuff. Speaking of cooking, I see you guys, your heat maps finally went official over there in the land of CME, so welcome, or I should say congratulations on that. And tell our listeners a little bit about that, as well as what else you guys have cooking up over there at QuickStrike.
Yeah, so the heat maps were released officially Monday, and from it's my understanding, at least they relayed the information to me, they've been very popular in terms of the interest. So basically what you're going to see there is it's going to start out like the TWIO report with the top 6 options showing both call and put, and it's going to color it based on where the maximum open interest is. So for positive numbers, you're going to see a white shading to a green shading. So white being the lesser of the range and green to darker green being the higher of the range. And you could also look at absolute change in number and percent change in number for open interest in volume numbers. So take a look over there. If you go over to cmegroup.com/QuickStrike, you're going to see all of the tools, and now that was a new page released there as well. So they're all grouped in terms of their functionality of each of the tools. So again, that's going to Ian in particular, that's going to give you a perspective for instance, with the heat map is you're going to see right away where the max strikes are both on the downside and the upside. So you're going to, again, have an idea of potentially where that future might be trading based on where the concentration of those options happens to be. So definitely everybody go out there and take a look. We've tweeted those pictures quite a bit as a precursor to the release, but now you have that tool and it's available out there. The other thing I wanted to mention today was talking to my friend at the CME, and we were talking about this weekend options report, and we may very well release on the free one where you can click through, Mark, and get to these details on the volume and the open interest and that type of stuff, because we're just finding that it might be just too interesting to not make available to the public, especially since we talk about it in such detail. We may very well be going there. And also, if you haven't done it, and I know I'm going a little bit longer than usual in my description, but if you haven't registered for QuickStrike Essentials, go out there. That's the free version. We added another cool tool only to that at this point, and it's the cross-product correlation matrix, and that's going to tell you basically over a 1-year period of time how much products have moved together or moved not together, right? The opposite, been correlated or uncorrelated, or negatively correlated. So that's under the analysis tools under QuickStrike Essentials. And if you're not a QuickStrike Essential user, you should go out there, because all the tools that you see for free on the site, they're all incorporated into that Essentials package. But there are pricing sheets out there and vol curves and term structures and that type of thing, which I think that you'll get a great deal of benefit from as well.
All right. Thank you for that, Mr. Nick. And thanks to all of you out there in the listening audience for downloading and streaming and subscribing to the show. Of course, for sending in such great questions. I hope we'll be back live streaming for all you guys who like to join us in the Mixler again next Friday. And we'll see you then for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.